Oh, hello, 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 and a massive hello to everybody. Hope everybody's having a great weekend wherever you may be, whatever you may be doing. Let's do this. So, 4th of September 2017, no trade calls, no recommendations, everybody responsible for their own stuff. We're here for educational purposes only. So, interesting week going on. So, we'll have to see what happens with the events over the weekend. I mean, in terms of the pure data calendar, what's going on? Well, basically, as we mentioned last week, we've got three central banks on deck, right? So, you've got RBA. And then you've got the BOC, and then we have the ECB, right? So there's a lot of event risk there, and also we have a lot of other interesting data releases, but the focus is likely going to be on North Korea with the events over the weekend. Now also we've got another Category 4 Hurricane Irma setting up, so that'll clearly be in the news. But I think the most interesting thing, as the charts really haven't changed that much, is going to be how is the market going to be positioned and how we're going to go into next weekend, right? A lot of people, I've seen a lot of people talking, just buy the dip, ES gap is going to fill straight away. And again, I wouldn't be surprised if that gap fills straight away. I'd probably be in the camp that thinks that a gap fill on the equities would be a gift from the gods, but we'll have to see. Keep in mind that next week, so again, and I'm not sure if I'm going to get this right, but basically the 9th of September, so which is a Saturday, it's a big event or country holiday in North Korea. I think it's the day the republic was founded, and they have a history of lobbying stuff that goes boom, right? So the way things are heading with the possible escalations on the weekend, with that coming up next Saturday, I think it takes some very brave machine or some very brave mouse clicking to try and go into next weekend positioned long risk. So we wouldn't be surprised to see a little bit of a bounce and a lot of wheeling and dealing on the central banks, but ultimately we would be very surprised if we don't see some positioning squaring and at least positioning for risk off going into next weekend. Okay, so what does that mean going into the week? Of course, VIX is going to be particularly interesting to keep an eye on, right? We're still saying, we still maintain that we think we're going to see this pop closer to the 20s. Unless it starts to get Momo above the 18, it tends to be contained. You want to watch, if you're keeping an eye on this, if it starts to hold above the 18, then you could get some funky action. So that's clearly something to watch. In terms of the equities, as we've said, we'll have to see how these opens, but look at the SPX failing at a key level, right? So you can go back on the previous videos, but we discussed these zones. So these are really sell zones we're looking to sell up for the move back into 2400. So that's still in play. If you look at it on the NASDAQ, so basically the NDX popped its head over new highs, then failed on a negative close, right? And then you've got the Dow, basically DJI. It's the same thing. It's stuck inside that sell zone. So you can go back on previous videos. Nothing much has changed. We're still looking at these moves to try and play out. But again, it's all going to be about what the news flow is this week. So in terms of DXY, right, what we said, especially if you go on the weekly, a bounce would be healthy. And it looks like it's trying to bounce at a key zone, right, at that 200. So if it's going to bounce anywhere, that's exactly where this is the good place for it to bounce. But we still think that unless we get back above the 9440s, 9450s, the bounces could be shallow. Above there, you could see a much bigger correction and position profit taking on this move down. As long as we don't trade above there, we'd expect the risk of this is to trade heavy. Of course, if we get something really nasty happen, we'll have to see how that will impact dollar flows across the board, as we discussed in the past, but that's pretty much where we are. In terms of gold, we consider our move pretty much done here, right? In terms of primary, we were looking for all this basing action, this breakout zone to ultimately go back and tag these highs from November and into the 1350s, and that's done. So as far as we're concerned, that's done. But again, with the risk off tone, and especially as we go into next weekend, we would expect to see any dip right back into the 1300 as a buying opportunity, or at least we want to be positioned long going into the weekend, not short gold for another possible ramp. But again, not a lot has changed on the chart, so I encourage you to go back and see previous videos. If you look at crude, it's still stuck here. We'll have to see what plays. We still maintain that this is an extremely choppy zone, and as long as we don't see action outside, it'll likely stay choppy. Especially for the upside, you really need to see a close above those 48.20s, 48 to try and get it. If not, and especially if we start to close back below 47s, we think that the path of least resistance is back down again. And of course, you know, we'll have to keep an eye on what happens on the DXY. In terms of the currencies, euro, there's no big change to what we discussed last week. Everybody was getting extremely bearish here at euro on the euro, and indeed it does look like same as the dollar, you know, same chart. If it's going to reverse, this is where it's going to reverse. However, we think it's still a little bit too premature to call for a big correction. Would not be surprised to see a 50% back of this whole move higher, but for now we still look at it as 120.40s, 116.50s being a big chop zone. And unless we start to get a close below this 200 on the week, this could still stay. Any dip could easily continue to rally for a break higher. We don't think it's a done deal yet. Okay. In terms of yen, no surprise, we've been very bearish for a while. And right here, as long as that doesn't change for us, as long as we don't trade back above the 112, we still think that there's this is going to trade heavy. We still think that because of risk off flows, there is a good chance that we try and take out these lows and we try and accelerate much lower. But again, this is a strong support, and if you're flat, any move and basing here, sorry, is long, clearly not a short, right? So we'll have to see. We'll have to see how this trades, but no big change. So again, across the board, also it's going to be interesting to see how Aussie, Kiwi, and CAD move on those on the central bank comments. Remember the CAD, we went into last week looking for opportunities to get long off that 125, and we did get for scalps, right? And we did get a nice little move here, just didn't get any traction. There's no point saying stubborn as long as we hold the 125, as this is the bull bear line. Keep in mind with that, BOC is going to be very, very interesting to see how this behaves. And if it doesn't catch a bid pronto, you know, you could see a lot more pain. To the downside, there's not that much unless you get all the way back into the 120, 118s. But clearly, if for some reason the shorts start to cover and they get caught off guard, we'd be looking at the 128 mark as the key bull bear line, especially on this break lower. Okay, guys, I'm going to keep it short. As you probably can tell, you don't have to be a genius. My voice is not doing great, so I'll post a recording on YouTube in a sec. Hope everybody has a great week. Stay safe. Thoughts out to everybody in Texas again. Let's see what we get. Should be an interesting one at least. All the best for everybody for great September. Stay safe and catch you soon. Thank you for all the likes, retweets, shares, banter, etc., etc., etc. As always, extremely appreciated. Take care, guys. Bye-bye.